Good day, guys. Welcome to Forex Walker. Welcome to episode 54. On this episode, on the previous episode, I talked about the New Zealand dollar uh, and the Japanese yen. So here we are seeing a turnaround that I was waiting for. So this is a short-term trade. But at the same time, I believe it will continue. It would have been much better for me to hold it from the previous shoulder if it could have turned around here after it did not even make it to the 50% feet. So that's the reason why I believe it might be a short term trade. It might just come to the 50% feet and drop all the way down to this shoulder, but it doesn't matter what it does. What will happen is that we're going to get this tiny bullish move, and it might reverse on this previous shoulder and take off, or it might drop lower. It doesn't matter. My wish was that we actually get to this 50% feet, but we did not. So so that we can, okay, I use the 50% feed as volume. I use it as volume. It makes me believe that we broke a few highs, this high, and probably this second high. So if we break all of these highs, this high and this high, these two highs up here, and that will make me believe that volume had jumped into the markets, and that will make me believe in the trade that comes after this previous shoulder. Okay, that's how I interpret volume without those lines that appear down here. So my how I trade price action, I use what we call uh, Wyckoff schematics. And when you see the market breaking the previous low before it takes off, we call it the spring. And when it comes back after hitting the 50% feet, when it comes back to the shoulder, we call it the test, and the market takes off. So that's just how I trade. Those are the systems that I use. As time goes on, I believe that you guys will get used to this Wyckoff schematics that I'm talking about. Here, I'm trying to show you the Euro TRY, the Euro Turkish Lira. We talked about it on in the previous trades. So what happened in the previous videos? What happened here is that we pumped higher and we reversed to what I have marked as the 50% feed, and, and the market went back to the previous shoulder. Let me zoom this thing in. The market reversed to this previous shoulder here, and as you can see, we're starting a new week, which I believe the market will be dropping lower. So I'm already in the market with my second position. I enter the market with two positions, first from up here, and the second one will be entered there. Normally, I take profit with my larger lot size first at the 50% fee, and when it comes back here, I remain in the market with the smaller lot size, and I wait for the market to retrace again. I told you that I don't trust the euro. There's a lot of things that I don't trust in the euro. So I am trading it, but with not without with smaller lot sizes. I'm cautious. This trade happens once a year, but if the at the moment the Turkish lira is getting weaker and weaker, I'm just waiting for the Turkish lira to turn around, and the euro is actually listening to the Danish krona or the Denmark economy. So this is a trade that I'm looking forward to. And if the euro decides to gain strength, this trade will die and I will have to exit completely. What is important is that when you hold this trade, your entry level drops lower and lower. The reason why it drops lower and lower, let me show you the reason why. Okay, you cannot see it visually, but the reason why it drops lower and lower is because of the this huge 1184.08 points short that you get for this is the swap that you get for holding the currency short, so you get paid this. So what happens is that even if the market goes below your entry level, you will see that you're still in the positives for holding this trade. Each day you're gonna be get paid. You're gonna get paid this huge swap, and each candle that we're counting here puts you more and more in the positives. Even if the market goes into your entry level, below or above your, even if it gets into your negatives, you will not see negatives, you will still see positives. That's why I'm saying the entry level moves lower and lower for each day that you hold the trade. So this is one of the best trades. They happen once a year, and the swap is really liquid. So it's so in the coming years, not years, in the coming months, I'm going to be talking about the famous Euro USD or the infamous Euro USD. Most people jump into trading, they look into the Euro USD, and this becomes their first currency pair, and it becomes their last because they end up exiting, they end up leaving trading altogether. They end up quitting their trading journey because the Euro USD is the most manipulated currency pair. It is actually more manipulated than the those indexes, your Nasdaq and the other indexes, US 30, German 30. I don't trade those things, but this thing is actually more manipulated than anything else that you can think about. So here we remember the weekly time frame channels or weekly time frame trend lines, or what I call primary trend lines, and these being secondary trend lines because they happen within the weekly time frame trend lines. We're on the daily, but I'm talking about the weekly and the daily. This is the daily, any trend line that is formed within this thing, I call it a daily time frame trend line. And anything that is at the edges of the larger trend line, it's the primary trend line or the weekly time frame trend line. The secondary trend lines or the daily time frame trend lines. So and here we have a first touch, second touch, and the third touch we expected to manipulate before the market drops. It will happen in the future, not now. So here we have our first touch, second touch. That means let me move this baby forward like that. Let's go to the weekly. I want to show you something. When we get to down here, what will happen is that we will manipulate this low. We'll actually drop below it. So the reason why we drop below it is because we have our first touch, second touch, the third touch has to manipulate. So this trade will actually collapse, will actually be something like this, but it will break below. So it will be the most longest trade held in history in macroeconomics. So the South African rand on the previous episode, which is episode 53, it is actually pricing in the sanctions by the US dollar. And at the moment, the US dollar is suffering from uh, what the China is actually picking up a lot of markets, even in South America. The trade, instead of creating uh, counter tariffs with the US, they left the tariffs as they were, and they started looking for other economies or other markets. So they're trading with South America, and they what they're boycotting. BRICS is actually boycotting US products. They are no longer trading. They are no longer taking US imports. So the tariffs are actually backfiring against Donald Trump. So that's something that is happening. But in this future that I'm looking into, I'm expecting the US dollar to become weaker, and the euro to actually become more weaker than the dollar. So I'm expecting this currency to move, you know, to this point that I'm praying to get, but eventually it will. And when it does manipulate this level, that's where I will be looking forward to holding those short positions. And the sooner the better. This is term four, the beginning of term four. We're actually in October, November, December. I will be talking about the Euro USD long term trade, because it will cross into January, February, March. It will cross into the first quarter of 2026, and it will be a long term trade that I was looking forward to indulging in. So this is the only time, most of the time, when my people are asking me about why you're not trading the Euro USD. I actually, there's a high possibility that next year I might take only one trade on Euro USD, just one for the whole year. So that's how I trade, because I'm a carry trader. And it's at the moment the US currency has the highest interest rates. So, and the pound is actually not doing well in terms of interest rates. The interest rates are lower than those of the USD. So it is difficult to actually, even if I had to trade the USD with the South African rand, it's giving me a negative swap, so I cannot trade it with that. So selling the US dollar can only be done with silver at the moment, but it's a negative 6 negative 6 point something. You pay a negative swap for holding trade, and that's something that I'm not planning to do. Let me show you silver so that we can talk about a negative swap that we can see. So this is I've been telling you guys that I think it was down here. I've been telling you guys to buy silver because of you know those interest there was an interest rate cut that was introduced by the US, so the currency pumped. uh, so a lot of people who trade gold or these commodities, they don't understand them, but you need to look it more into interest rate cuts, the central bank decisions, for you to be able to hold trades. So goodbye guys, I will see you in the next episode.